This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend and a very happy Easter to you as well. I'm Ross Greenwood. Coming up on the program today, financial markets again this week were highly turbulent as Donald Trump sometimes added the tariffs, then promised more, then eased back. But Australia, curiously, could be a beneficiary from all this as China in particular looks to replace US agricultural imports with goods from other countries. So we speak with an expert panel about where the opportunities lie.
What I would say initially is the world still needs the same amount of stuff. So when a trade war like this happens, what realistically happens is different commodities end up going to different markets.
But, and let's be honest about this, some of that luck might be undone by what seemed to be reckless spending and reckless policy, especially around housing, from both sides of politics in this election campaign. And many economists this week spoke out strongly against a spending spree, more than $30 billion from each side, with few signs of budget control.
And I think whoever wins the election, Treasury is going to have a serious talk with them about how to fix the situation in the long term.
And one of the consequences of the cost of living crisis is an explosion in shoplifting. An estimated $9 billion a year is lost in Australia alone. Well, now a New Zealand company is rethinking the tools needed to stop the growth in shrinkage. So all that and plenty more coming up on today's program. But look, I want to start with another week of market dislocation as US tariffs were on, then off, on some things, then back on, and coming for other products, including semiconductors and pharmaceuticals. The markets, they're volatile because of the prospect of an economic downturn, even perhaps a global recession. And Federal Reserve Chair Jerome Powell spooked the markets even more this week when he admitted that the impacts of the tariffs are bigger than anticipated.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well.
Not that you'd know any of that if you lived right here in Australia, where both parties continue to spend tens of billions of dollars of future taxpayers' money as pledges to try and convince people to vote for them. Well, this week, a group of senior economists in the Financial Review dubbed this election campaign as the most reckless in living memory. And they're right. One of those economists is Stephen Hamilton, former Treasury official and assistant professor of economics at the George Washington University based in Washington. And I spoke with him just a little earlier.
Look, it's as though all constraints have been removed. I'm not that old, Ross, but I'm old enough to remember when the budget deficit or the surplus even mattered, right? When that was a source of competition between the parties. And that's just completely gone. I mean, the coming year, if the government hadn't made any decisions since the last election, if it had just offset everything, the deficit would be just $5 billion. And it's currently $47 billion, right? So these are the times we live in where, the size of the deficit no longer has any bearing on political outcomes.
But it just seems to me that neither side has got any contingency plan if there is a global downturn. It's got no contingency plan if unemployment is not 4.25% flat, which is what the budget forecasts, if it goes to 5.5% or 6% because of a downturn. And therefore, as a result, they'd have to be supporting those unemployed people, and on top of that would not be collecting the massive amount of revenue they're getting from PAYG taxpayers right now.
Yeah, so we're due to, have $1 trillion of debt, and it's only going up because we're in a structural deficit and we remain deficit for the next decade, right? So, the general long-term budget management kind of strategy should be to have a balanced budget on average, right? Not every year. If you have a bad year, you have a recession, you have a pandemic, you have a financial crisis, you can run up some debt. But when you have rivers of gold flowing in, you have to really run massive surpluses to counteract that debt on average over time. And we've seen, the highest terms of trade in Australia's history in the last 3 years And we just didn't do a good enough job of locking away those gains for the hard times. So yes, I mean, I think the budget in general is on a very bad trajectory. I think the forecasts that the government has in the budget are wildly optimistic. And I think whoever wins the election, Treasury is going to have a serious talk with them about how to fix the situation in the long term.
But you've been there. You've been inside Treasury. You know the conversations that take place. So the political imperatives of those parties, the coalition or Labor, versus where Treasury thinks should go. Now, they come up with some solutions potentially. You could tax this. You could actually go and put tax on unrealised capital gains. You could address negative, whatever it might be. But the fact of the matter is, it's whether the political parties think that the population can actually swallow those types of measures.
Yeah, well, there's something very interesting, Ross. I don't know if you've seen the front page of today's Australian, but Peter Dutton has promised an aspiration, I should say. A promise is too strong. An aspiration to get rid of bracket creep by indexing the tax thresholds, which is obviously something that I've called for a long time. Now, the current government's plan is to have bracket creep rip over the next decade and to basically entirely close the entire deficit and get back to surplus in 10 years purely by bracket creep, which would involve a pretty dramatic increase in people's income taxes, right? And you can imagine the negative effect that rise in income taxes has on economic activity, right? Because it's a big constraint on our incentives. So, Peter Dutton has this alternative to say, well, let's take that constraint away, which is great. The trouble is you have to come up with an alternative way to close that budget gap, which means a conversation about tax reform, which frankly is a conversation no one wants to have.
So then take me to the global situation, because what you're seeing this week with Jerome Powell coming out and saying, well, hey, we think the effect of tariffs is more significant than what we expected, and we think it will lead to higher inflation than what we expected and a slower economy than what we expected. Now, that spooked markets again, which you can understand, but it also leads to the prospect of a slowing global economy, which Australia is not immune from. So if you've got government spending significantly more, you've got Australia less competitive because of its tax situation, then you've got a point where Australia really doesn't have too many places to turn if there is a global downturn.
Yeah, so I think the key thing I would take away from Powell's remarks are how tricky it is to kind of navigate these waters, right? The tariffs have such a strange impact on the US economy that knowing exactly how to respond is difficult. They obviously generate a lot of uncertainty, but the issue is, on one hand, we have a big supply constraint, right, which should push up inflation, and we see those inflation expectations have risen. But on the other hand, we have a bit of a demand contraction because people are really worried about what's going to happen. And the combination of those two things, well, it's really uncertain what that means for the economic outlook. And in fact, the Fed is in a really sticky situation because on one hand, if you have a slowing economy, you want to lower rates. If you have rising inflation, you want to raise rates. The plane sort of stalls. You don't know what to do. And then layer on top of that something even crazier, which is that as the stock market has been collapsing, bond yields have been going through the roof, yes, which is the opposite of what usually happens. And that's indicating that, the whole structure of the US bond market is breaking down. I would not want to be the Fed chair over the next 9 months. And yes, you're dead right. If America sneezes, Australia catches a cold, and I think there are serious risks for us.
And the one thing also, even in Australia, with retail politics obviously playing the game in this election campaign and this extra spending we're talking about, it all goes back to housing markets. And you've even talked about this week that the coalition's policy to basically try and make some part of the, if you get a new build and you're a new home buyer, you get part of that tax deductible and you can take money out of your super fund. But again, this just skews the way in which people move their money around and skews the markets.
Yeah, let me get one thing straight, Ross, up front. I don't like either of the housing policies. And I think the view among economists this week has been frankly scathing of both. And I think that's clear. I mean, both sides have really doubled down on the demand stimulus, which is exactly what economists say don't do, but they feel political pressure. They need to fix the problem They feel like they don't have a lot of levers, and the only thing they can do is subsidise demand, and so that's what we get. Now, both sides have done a little bit on supply. You know, the coalition has this $5 billion kind of infrastructure program, and Labor has this program to incentivise the states. I would have preferred to see something like the nuclear version of that, right? To really ramp up the incentives for states to open up supply. And unfortunately, neither side went for that. So I don't think either is going to meaningfully address the housing crisis.
And there's a bottom line truth of this. Nobody will build a house as a home builder unless you make a profit at the end of it. So you won't take the risk to build unless you pretty much are guaranteed a profit. Until the private sector is given significant enough incentive to build, in other words, opening up land, opening up development approvals, all this type of thing, nobody is going to go and do it. And so therefore the crisis just gets worse, doesn't get better.
Yeah, so one of the developers' costs is the land cost. So if you lower the cost of land, that lowers the developers' costs, which means that they are more likely to do it, right? So that's kind of a good thing. We need that, right? The other issue is, you know, we have incredibly high construction costs, right? And they've been particularly high during the pandemic and coming out of the pandemic, and they're easing, but they haven't been helped by, frankly, an explosion in public demand for kind of infrastructure programs and things like that. So, you know, I think there's a multifaceted approach that has to happen here. We need more construction labor through immigration. I wish our immigration program heavily favored construction labor. We need to lower those construction costs in various ways, and maybe there are some unconventional processes we could use, maybe a GST holiday for construction inputs to housing, something like that. And of course, we need to radically increase the availability of land, but also the use of land closer to the city centres. And if we took that kind of crazy, wild nuclear option to massively increase supply, we've just seen in other locations that it leads to a significant easing in these crises. So, you know, I think that's the only silver bullet we really have.
And you just need politicians who are brave enough to do that. Stephen Hamilton from the George Washington University. Always great to chat to you, Stephen, and many thanks for your time today.
Cheers, mate.
Well, last weekend on Business Weekend, we ran an exclusive interview with the Chief Executive of Australia's anti-money laundering agency, AUSTRAC. That's Brendan Thomas. He talked about new laws for lawyers and real estate agents to establish that their clients are not laundering money. Have a listen.
Real estate's a great example where we're not only dealing with the proceeds of Australian crime, but Australia is an attractive location for international criminals, not only to launder and wash money, but to store their wealth. So what money launderers often are trying to do is to make illegitimate money look legitimate. But what they also want to do is store that illegitimate wealth somewhere where that value can be maintained. Australian real estate holds its value pretty well, as you know. And buying property with illicit money is a great way to store your wealth.
The new laws also prohibit lawyers, real estate agents and others from tipping off their clients that they're being investigated by authorities, including AUSTRAC. But not everybody is convinced this is the right way to go. Former Queensland Premier Campbell Newman is one of them and joins me now. Campbell, always great to chat to you. Just explain where you have problems. Most people would say, look, money laundering is bad. We should try and crack down on that in any way that we can. What is your problem with these new proposed laws?
Well, Ross, I want to make it very clear, of course, that I think we should be doing what we can to stop money laundering and people funding terrorism. But this isn't the way to do it. Indeed, the new laws are a sledgehammer to a walnut. Worse, they're like iron filings in the gearbox of the economy. If you'll just indulge me for a moment, and if the viewers will just bear with me, if I could just read something. And this is from the Attorney General's Department, May 2024, sort of information and discussion paper on these new laws. Try this one. This is a direct quote. For example, Veronica and Josh, a couple in their mid-30s, are looking to purchase a dog grooming company in Seaside. After finding the perfect business, Coda and friends, Veronica and Josh seek assistance from Emma, a lawyer at Legally Yours, to assist with the legal aspects of the business acquisition. Before starting work for Veronica and Josh, Emma follows the standard procedures for customer identity and risk checks in Legally Yours' anti-money laundering counter-terrorism financing program. Emma requests a certified copy of Veronica's and Josh's driver's licences in order to verify their identities. she asked Veronica and Josh what they do for a living and what attracted them to this particular business. After recording and evaluating this information that's been provided, Emma is satisfied that Veronica and Josh are who they say they claim to be, and do not raise any concerns about whether they are purchasing the dog grooming business for illegitimate purposes. I could go on. This is from the government's own paperwork. And I ask any politician who might be watching this show, Ross, is that what the Parliament had in mind? That I'm buying a dog grooming business and my lawyer or my accountant is having to do that? I'm sorry, mate. This is regulatory overkill, and there are better ways that should be being employed to go after the real criminals.
Okay, so the issue of the dog grooming business actually strikes a chord with me. Now, it doesn't matter whether it's a tattoo parlour, a dog grooming business, whether it's a money transfer business overseas. It seems to me this is about illegal funds entering into the legitimate business practices in Australia. Now, we know from last week there's somewhere between 13 or 12 and $13 billion worth of drug deals every year that have to be laundered. So it's inevitable it'll go somewhere. My point to you is, if you don't do it that way, how do you do it to ensure that that illegal money is not entering the legitimate business scene?
Well, Ross, you're talking to the guy who, back over 10 years ago, drove the bikies out of Queensland. And the bikies here were the main people involved in the production and distribution of ice. And when we did that, the crime stats showed very significant reductions in assaults and burglaries, etc., armed hold-ups. And my point is, we were able to drive them out of the state. Now, at the time, we put in place some very tough laws that were criticised, but frankly, those laws weren't required. What was required was political will and pressure on the police service to actually go after the criminals, and to also put pressure on the Crime and Corruption Commission, who have in Queensland extraordinary powers to go after organised crime, which they were not using, by the way. And the police and the CCC worked together very effectively, and for a period of time, the bikies were driven out of business in this state. Now, what happened then was, after we were thrown out of office, the political pressure wasn't there anymore, and they came back. Now, why am I saying this? Well, my position is this. Generally, there is criminal intelligence out there held by state police, the AFP and other bodies. They know who the real bad guys are. They know who they really should be going after. And this is just a grab for more power. I believe that if they really want to sort of keep track of what's going on, that really the secret here is to actually conduct surveillance of the banking network. In this day and age, if AUSTRAC had not just this $10,000 sort of limit that's currently there, if they actually had access to all transactions and then used serious computing power and AI, they very quickly, cross-checking with people they know are involved in criminal networks, build up a picture of what's going on, and they would build up the intelligence they need. The problem here, Ross, is they're making everybody involved in legitimate business, they're making them comply with bureaucratic procedures. They're also making lawyers and accountants and real estate agents end up as people who are having to inform, essentially become dobbers. I mean, this sort of stuff would never have got up 40 or 50 years ago in Australia. That's how far we've come towards a state of mind where we believe that ongoing surveillance and a requirement for everyday businesses and professional firms to suddenly become part of the apparatus of law enforcement. I mean, it's pretty stark, actually. These are extraordinary laws, and there hasn't been enough debate before they were put into practice.
Okay, then go back to the root cause of the need for the money laundering, which is the consumption of drugs at $12 to $13 billion a year. If you're able to reduce that, you would reduce the amount of money that needs to be laundered. If you actually had, say, illegal tobacco, which has gone, has cost the government $7 billion a year simply because it's been driven underground. So what's happened in many cases is that other things which otherwise might have been above the surface, money going through casinos or money going through, sort of typical tobacconists, now being driven underground is part of the problem why it's been driven into the hands of crime.
Well, look, I think you've got some really good points there, and let's just pick some of those apart. Firstly, this whole thing about illegal tobacco. In the last 2 to 3 years, we've seen heightened excise on tobacco. Legitimate products have gone through the roof in terms of their pricing. That spawned a huge black market in illicit tobacco. We're then seeing a massive turf war, particularly in Victoria, with the torching of tobacconists. We then hear, police ministers and premiers and, senior officials thundering darkly about the tough new laws and we're arresting people and all this stuff. But they actually created the problem because they've put the price of legitimate products up too high and they've created this huge black market. And then they've seen a drop in actual excise. They've been complaining. Actually, it's been in the media recently. They're seeing receipts dropping. This has happened before in history, in Western history. It happened with smuggling down in Devon and Cornwall back hundreds of years ago. And I think, I forget the name of the British PM, but he was sensible enough and enlightened. When he dropped the level of excise applying to various products that were being smuggled in, suddenly smuggling activities dropped dramatically overnight and revenues went up. But another aspect of this is the crackdown on what's going on in casinos. And we're seeing from reports, say, in the Daily Telegraph, that there are suggestions there's quite a significant increase in illegal casinos operating in Sydney because of the surveillance and the crackdown on the legitimate outlets.
So one last thing for you, and that is, let's go back to Brendan Thomas, shall we? Because you talked about the accountants and lawyers, whether there's too many laws there, but really, in many cases, they're helping, either innocently or not, to facilitate this. Have a listen.
Shelf companies that look like they're doing one thing but might actually be a front for money launderers. Organised criminals need professional enablers to help them do that. They need lawyers, they need accountants, they need trust and company service providers to give them the advice to be able to do those things. Sometimes we see those professionals acting in conjunction with organised crime. Sometimes we see them just naive as to what's happening and not really asking the right questions.
Surely, Campbell Newman, it's not too much to ask an accountant, a lawyer or a real estate agent to say, well, hey, do you know who your client actually is and where they got their money from?
Well, I'll put it like this, Ross. The good guys and gals, the law-abiding citizens, they will dutifully follow these new crazy over-the-top laws. The bad guys, the criminal lawyers who are actively involved in the criminal enterprises, they will continue to do criminal things. When I was Premier, and I've got to be careful about what I can say here, I think I'm safe enough ground here. When I was Premier and fighting the bikies, as I alluded to before, I was told by the police and the Crime and Corruption Commission about a number of different lawyers in South East Queensland who are actively involved in criminal motorcycle gangs, not as legitimate legal advisors providing the sort of defence that every citizen of Australia is afforded, but actually people involved, as the head of AUSTRAC was just saying, in the criminal enterprises themselves. Well, this is my point. We know in general who these people are. We know the gangs. We know who their advisors are. Those things can be ascertained. And it's a bit of a case of the 80-20 rule. A huge impact could be made by going after the people that the law enforcement authorities already know about. But what they're doing here, Ross, is they're making business more difficult for everyone. And the idea, and that was, again, that quote at the beginning, the idea that you would have to go through that sort of palaver to buy a dog grooming business just shows you how insane these laws are. And I again say, I hope if there are any politicians watching this, you should have a better look at what's going on with these law enforcement agencies. They are taking the proverbial by requiring everyone to go through this. I predict these laws ultimately are going to be unworkable.
I'll tell you what, Campbell Newman, good to have you on the program today, and many thanks for your time.
Thanks, Ross.
Campbell Newman there. Well, coming up, Is Australia a net winner from Donald Trump's trade war? China will need new sources of key agricultural goods, including oilseeds and wheat. Up next, our expert panellists. This is how Australia should position itself to take full advantage. It's great to have your company here on Business Weekend. Look, we explained that Donald Trump's tariffs on China and its retaliation have upset financial markets and some fear could trigger an economic downturn, even a global recession. But look closer at the detail and you also see opportunity, and especially for Australia, the lucky country. The key is to look at America's biggest exports to China. You can see them here. These products will now be hit with tariffs of at least 125%. So back in 2023, US exports to China will give or take $150 billion US. The biggest export item, oilseeds and grains at $25 billion US. Think soybeans, canola and wheat. Oil and gas is big, that's $11 billion. And meat products, $5 billion. So is Australia actually a winner from this trade war? So let's bring in here our panel for today. Arnold George from the Export Council, Dennis Vosnezensky, agricultural economist with the Commonwealth Bank, and Zachary Whale from Grain Growers. Zachary, can I start with you? And you saw those numbers there come up. You can see oil seeds, you can see grains. Does that actually mean that Australia's grain growers, and in particular our canola growers, for example, are going to be big winners if China turns to Australia to replace American products?
Look, I think it's really hard to tell what the specific impact will be, but what I would say initially is the world still needs the same amount of stuff. So when a trade war like this happens, what realistically happens is different commodities end up going to different markets. So for us, for oilseeds, most of our oilseeds currently going to the EU, and so this might impact, which specific country buys how much. But the world still needs this stuff. So I think Australia is in a really good position to keep growing these commodities and keep exporting them. But what I suspect we'll see is slight changes into which countries take them.
Okay, so Dennis Vosnezensky, do you see any flow of trade? Do you see Australia as a winner, a net loser out of these trade wars?
Well, look, in the short to medium term, I think we're likely to be winners. So, for example, the US exported around 4.6 million tonnes of sorghum to China in 2024. There's about 1.7 million tonnes of wheat, 1.3 million tonnes of corn, all things in theory that they can start getting from us. Now, of course, I know we don't grow much corn, but we do grow a lot of feed grains. And we do, like you mentioned, grow also canola. Now, in the short to medium term, yes, there could be more demand for our product. And since the trade war began, we've actually seen an uptick in prices for a fair few commodities, including feed grains, including beef as well. But the one longer term challenge that we have to look at is that ever since probably the 1940s, our whole industry, agricultural industry more broadly, has been orientated around a large export market overseas and around free trade. As we move around free trade and there's a lot more disruption, does it start limiting that potential export growth when we look, okay, what's going to happen in the next 5 to 10 years? So we've relied on free and open markets, on a large export program. That's where a lot of the growth as an industry has come from. If that starts getting curtailed, what type of longer term impact does that have? Possibly a negative one.
I'll tell you what, and Arnold George from the Export Council, given all of that, is now a time that Australia's exporters have got to be more aggressive in trying to fill some of these markets where Americans in particular might be priced out of them going into China?
Absolutely, Ross. There's a strong opportunity here for Australian exporters, not just to look at China, but to other parts of the world where they were traditionally, say Latin America, there's traditionally a good market for the US, but they're finding that the US is now an unreliable trade partner. So they are looking for alternative sources of supply. So absolutely Australia can certainly tap into this market. There is a concern that the growth in the world economy is going to slow. However, as we've seen, China has visited recently some of the Southeast Asian countries, and certainly trying to assure them that there is a pathway forward in the context of new investments. So as those investments come into line, again, there's an opportunity there for Australia to take advantage of those opportunities. But those exporters will need a helping hand from the government in the context of cost. there are a lot of costs that's likely to materialise.
Yeah, because as we're saying here, if it's oil seeds, if it's wheat, if it's meat, then quite clearly the world is still going to eat regardless of the economic circumstances. So from that point of view, Australian exporters, or those that are capable of exporting, they potentially will find themselves in a better position, either one, through extra demand, or B, through extra prices.
Sorry, yeah, absolutely. Australia could comparatively find some competitive advantage in the context of any cost differential, but also there's a quality issue as well. So, and that's something that we've certainly been talking to exporters, is to highlight what makes Australia different from any other supplier. It will be competitive. Expect the Canadians also to push pretty hard. So it's important for us to position ourselves quite early in the process, yeah.
So, Zachary, well, just explain one thing to me here, because there might be demand, but as we know, you can't simply magically appear with a new crop of canola. I mean, it's going to take some time to get in, or if you're going to try and create more beef, that'll take more time. But in specifically the grain growers, how long would it take them to respond if there is a change in global demand?
It's a really good question. Growers love to have set rotations, so they like to pre-prepare what they grow years out, and they try to stick to that. And so when we see commodity prices really fluctuate, sometimes we see a small change in grower behaviour, but they would rather stick to their set plan. However, if you've got a boat and if you've got a port and if you can get the administrative arrangements across the line, you can divert cargoes while they're on the water, and we can send these commodities anywhere in the world, providing there's a port to receive them. So to that end, what we really need is government remaining focused on supporting industry and working alongside industry, so that there is as many open doors as possible. So if one door shut, another open. So for instance, a few years ago, Australia was locked out of the Chinese market for our barley, and we were able to divert our barley to markets like Saudi Arabia, and even some premium barley into countries like Mexico. So that only happened because industry had worked hard with the Australian government to make sure those opportunities were there. So, there's a program called the Agricultural Counsellor Program that puts agricultural specialists in high commissions and embassies in our key trading partners around the world, so that they can help resolve trade issues, help work through the paperwork, and if we need to actually start to put commodities into new and emerging markets, we're able to do that seamlessly.
So Zachary, while I've got you there, does it also mean that Australia's got to be very careful, in particular with its relationship with China in this tariff war? Because quite clearly, we might be able to fill some gaps that China might have with food and with grains, soy even. But the reality is, given our geopolitical associations with the United States, we've got to tread fairly carefully to make certain that those doors remain open.
Absolutely. I don't need to remind barley growers what it was like to be locked out of that market, red wine. There's a range of commodities that have been impacted in the last couple of years. I think this goes to Dennis's earlier point around the long-term impacts of a trade war. So historically, the World Trade Organization has helped uphold a set of rules and has let countries work through trade disputes and negotiations. And for a middle power like Australia, that WTO process has been really beneficial. We used it with barley and it helped resolve that trade dispute. If big players like the United States play by their own rules and run it alone on these things, and if other big markets follow suit, that will make the World Trade Organization far less capable for helping countries negotiate complex disputes. Now, for a country like Australia that exports so much, that's likely to have a negative impact. Who's the umpire? Where's the rule book? How do we work through these really complicated issues? That's something that we've got to be absolutely focused on because it's really important for countries like Australia.
So, Dennis Mollison-Dzezinski, just come back to Australia, because quite clearly, with 10% tariffs from the United States, the one that everybody looks at is beef exports. Now, a lot of people, you and I have talked about this before, regardless of that 10% tariff, Americans still need Australian beef. And so they're the ones who will ultimately pay the higher prices. It simply still means that they need the beef because they can't produce enough of their own. So it goes in regards to all this trade that Australia is in quite a unique position because of its net exports of food.
That's right. So if we look at the beef situation, the US has a cattle herd that is at a multi-year, probably multi-decade low. And more importantly, that their consumer demand has been, up to recently, incredibly strong. So from a perspective of who bears the burden for the time being, it looks like US importers are going to be bearing at least part of the burden for importing that beef and paying for that tariff. Moving forward, though, the important thing to watch is the indirect impact, not the direct one. So the US, due to all these policies, due to all these tariffs, due to uncertainty, is causing consumer confidence to decline quite sharply. And if you look at the Michigan University Consumer Sentiment Index in America, you have a 30% decline since the start of the year. So if you're a consumer in America, you're feeling a lot less certain about the future. And what do when you feel less certain? You start saving up maybe a little bit more, you stop spending as much, maybe you trade down in terms of quality of goods. And that eventually could lead to a bit of a depreciation in terms of demand or a decline in demand. So that's something a bit indirect that I'm watching, but from a direct perspective, there's not much cattle in the US and demand has been strong. And if you look at, for example, Canadian exports to the US for beef, they're down 26% this year, partially just due to a multi-year drawdown on their herd as well. So from a demand point of view for our beef, it's still looking strong despite the tariffs, but I really would keep an eye out on the economic impact of all of these tariffs and trade wars.
Yeah, there's no doubt, because you've got to ask the question, if they're not going to get the beef from Australia, where are they going to get the beef from? Arnold, George, just one thing we can't ignore in all of this conversation, and that is Australia right now has got a very low historical Australian dollar. That only adds to the story of Australian exporters that we actually are in a very beneficial position because of that cheap Australian dollar. We know that Donald Trump has got a policy of trying to bring down the US currency. It hasn't worked, certainly against the Australian dollar at least. And so again, this is one of the reasons why, your members, Australian exporters, are probably in a pretty prime position to fill any gaps that emerge in the global markets.
Well, Ross, I think the dollar will be fluctuating quite a bit in the near term. As one of our colleagues had just mentioned there, is that if the U.S. economy declines, then potentially the value of the U.S. dollar is likely to go down. So in that context, the Australian dollar will actually go up, and that makes it much more expensive. So look, the key thing here for Australian exporters is really to diversify. The U.S. market only represents 5% of Australia's exports. So certainly compared to China, which represents more than 30%. So absolutely, that's where our economic weight of our interest should be. In that context, I think absolutely take advantage of when the Australian dollar is low, and look at working closely with their buyers and importers to maybe consider surge exports when the time is right.
So it's going to be fascinating to watch this. Zachary, well, I want to come back to you on this because, you can't ignore the fact that Australia right now is negotiating again with Europe, the European Union, to open up free trade agreements there. Now, they were stalled on a whole range of things, including beef in the past. So if, say, for example, the European market were to open up, just again, go back to that issue as to how quickly grain growers in particular could respond, because the opportunity is there. The question is whether Australia can grow enough to actually fulfil that demand.
The EU is an interesting one for the grain sector. We've currently got relatively good access for our oil seeds, and that's historically been one of our biggest markets, feeding into things like the European Union's biodiesel requirements. So that we've already got good access, and the EU does produce a lot of cereals, so we historically don't put much stuff in there. Look, I think these agreements take so long. I think Australian producers will have time to adjust to the opportunities if that agreement eventuates. I think the message would be, though, we need those agreements to continue, not just with the EU, but with a whole range of markets, because that is going to be where the opportunities lie. If this volatility increases, we'll end up falling back to these free trade agreements that we have with so many important trading partners, and they provide us a lot of certainty and stability, which gives our producers confidence.
Great stuff. So, Dennis Vozniacki, sum it up for me. Australia, a winner or loser out of these tariff battles?
I would say for the time being, it looks like we're winners. There is, of course, challenges with the tariffs longer term. So right now, there is definitely a shortage or a limitation on how much beef the US can get inside of North America. But in the future, once they rebalance that, and if we haven't reached a deal yet from a tariff perspective, that could become challenging. One interesting thing I just wanted to add to what Zach was saying, though, the European Union, how we could benefit could be, again, slightly indirect. So if Europe goes ahead with tariffs on the US, well, they've actually recently been importing soy meal and soybeans from a feed perspective inside of Europe. So from a dairy perspective, cattle perspective, and if they put tariffs on US goods, that may mean they could need a little bit more canola than usual, maybe a little bit more feed grains. So that's something interesting to watch as well. There's a lot of indirect factors that are just popping up here and there that you didn't really quite expect in the beginning.
Well, I've got to tell you, it's been a fantastic panel. And again, it's fascinating to see that Australia could be net winners, at least in the short term, from all this. To Arnold George from the Export Council, to Dennis Vosnazensky from the Commonwealth Bank, and Zachary Whale from Grain Growers, many thanks for your time today. Well, coming up after the break, from the cost of living crisis, another reality of doing business is being amplified: theft and shoplifting. We speak with an Aussie tech company trying to clamp down on the $9 billion that's estimated to be nicked each and every year. It is great to have your company here on Business Weekend. Now, it's estimated that shoplifting, or shrinkage as our retailers often call it, costs around $9 billion each and every year. That's in Australia alone. The National Retailers Association says 85% of retailers have experienced abuse when they've tried to prevent crime, and that around 80% of crime goes unreported. Well, a New Zealand-based company called Aurora, now firmly fixed in Australia, took quite a different approach to crime prevention. It analyses data to create security systems in an effort to thwart the criminals. Nick McDonald is Aurora's Senior Director for Trust and Safety and joins me now. Nick, many thanks for your time. I mean, let's first quantify the problem of shoplifting, of shrinkage, and go to the fact that that ultimately costs consumers because there are higher prices as a result.
Yeah, that's right. I think you've referenced it. It's $21 million a day in Australia, which is a pretty large sum, but that relates to the loss of the product, right? The untold cost is the cost on the individuals in the stores, the individuals on the frontline retail workers who are being assaulted, abused, spat at, all those kinds of things. That's an unquantifiable number as well. So it's pretty serious stuff.
Okay, so then the normal thing would be to put in systems, cameras, whatever it might be, to try and prevent or to discourage, shall I say, the thieves from coming through. And these days it's highly organised. There can be gangs coming through and literally hitting up shopping centres, and there's little that even security guards or individual staff members in those shops can do anything about.
Yeah, so we work with roughly around 80% of the retail sector in Australia and a number of other countries as well. And what the numbers tell us consistently across all of those markets is essentially that over 60% of the crime is being committed by 10% of the people. And often that's organised crime as well. So we're not talking about the cost of living Robin Hood sort of situation. This is organised crime. Products are things like high value electronics, beauty items, those sorts of things, and they're ending up on the black market and they're going into other forms of criminality. So, yeah, really serious stuff.
Okay, so then you've approached this differently, though. You've taken a data-driven approach to it, recognising, the way in which the criminals, sort of, if you like, the way in which they operate, but then trying to figure out where weaknesses are in the retailers' own networks.
Yeah, so essentially retailers have always captured data around criminality in their stores. What we've done is provided them a software to be able to capture that in a structured way. And once they enter in multiple things, thousands of times, what they can start to see is individuals are responsible for multiple offences, and they can then start to do things within their stores like what they call target hardening. So it might be the layout of their store, it might be the types of products they have, times of day for putting guarding resources on, all those sorts of things. It also allows them to identify if people have been aggressive or violent, provide training to their staff. So that's the first bit. The next bit is that we also then provide a digital way for them to collaborate with police and be able to share that information with police so that the police can do what they do best and focus their quite precious resources these days on the people who are causing the most amount of harm in the community. And that allows you to surface the issue. That allows you to really focus on the problematic offenders, the repeat offenders. And the really big thing about repeat offenders, Ross, is that those repeat offenders are 4 times more likely to be violent. So this is not about shoplifting. It's really clear to sort of say that. This is about people being safe at work. It's about people being safe being customers in stores. And ultimately, it's about the community being safe because our retail outlets, our malls, our supermarkets, all these things, they're hubs of the community. So this is a public safety issue, not really a shoplifting issue.
But then the consequence is it also does address the shoplifting issue on the way through. So you're right about the policing, because one of the issues is, given the amount of theft that goes through stores, if police were to chase up every small individual item of shoplifting, then fundamentally they would have nothing else to do but shoplifting. So the reality is to try and hit it at its core and where it's happening at its most significant and also where it's happening at its most dangerous. And that's what your software, what the work you're doing with the retailers is starting to identify.
That's right. So if you look at, say, Victoria, we are the software that is used by police in Victoria and under Operation Stand there in order to identify the top offenders in the retail crime space, and then they are able to focus their resources on that. And that happens across multiple police operations across the country. And you're right about the volume challenge of this crime, and that's why technology is so important, and it's what we've done at Aura, is we've been able to build a system that takes what retailers have always done, focus in on the people that are causing the most amount of crime. And previously, those are housed in siloed things. One store has its information, another store has another piece of information, and they were never connected. And what we've been able to do is connect that so police and retailers themselves can really focus on those high harm offenders. And that's the beauty of technology dealing with a scaled social problem like this, because you're right, it's impossible to chase every retail crime instance. But if you can focus on the organised crime, focus on the repeat offenders, focus on the violent offenders, that's where you're going to see the biggest dent in this issue.
Okay, so Nick, just one final one, and that is go to the issue of, yes, this might be capable for very large retailers who have the resources to be able to take your software and be able to use that and be able to analyse, but then take the smaller retailers, individuals, small businesses and so forth, that they have the same capacity.
Yeah, so it's a good point. And what we see is that you normally, within a community, offenders are not brand loyal, right? They're not just going to steal from one store. They're going to steal across different stores. They're also going to steal across state lines, by the way. So this is actually a national problem. It's not contained necessarily to just one community.
Nick McDonald, Aurora's Senior Director for Trust and Safety, many thanks for your time today.
Thanks, Ross. Appreciate the time.
And that's it for the program this Sunday. Up next, all the latest news right here on Sky News. Business Weekend returns next Sunday, but of course, you can keep up to date with all the latest business news with our daily program, Business Now, 4:30 p.m. Eastern Time, and via our website, skynews.com.au. Thanks for your company today. Happy Easter. I'm Ross Greenwood. We'll see you next week.